15 of 19 series are aligned with STAGFLATION mild this morning. That is a strong, broad-based confirmation reading across the 19 series framework. The current macro regime is STAGFLATION mild, with a confirmation score of 15 out of 19. The regime means growth is decelerating at -0.5879, while inflation is accelerating at +0.0081, a configuration the engine classifies as mild stagflationary pressure. The coherence score is aligned with the same 19 series regime structure, and the confirmation score of 15 out of 19 sits within a historically meaningful range. Historically, regimes with a confirmation score in this range have persisted in 52% of comparable cases over a 3-month period, with the most common transition being acceleration. Compared with last week, confirmation has held at a strong level, while the growth composite remains negative and inflation momentum remains positive. In prior samples, this type of environment has coincided with uneven equity participation, stronger sensitivity in energy-linked prices, and a market tone that feels more defensive than expansionary. The labor side remains one of the softer signals in the framework. PAMs and IXA remain in the red set, with red defined here as unfavorable momentum inside the regime stack, meaning the series are moving against broad growth stabilization. In the historical sample, when labor indicators sat in this kind of weakened configuration, softness in hiring and claims behavior appeared within a 3-month window in 7 of 11 comparable instances. The inflation side remains more pressured than calm. CPIL and T5YAE are in the green set, with green defined here as favorable momentum for inflation pressure inside the regime stack, meaning the series are moving in the same direction as the inflation composite. In the historical sample, when inflation-linked measures turned green while growth stayed negative, higher inflation readings and firmer pricing behavior appeared within a 3-month window in 9 of 11 comparable instances. The term structure signal is also less supportive. T10Y2Y is in the red set, with red defined as unfavorable momentum, because the curve measure is still moving against a cleaner growth reacceleration profile. In the historical sample, when T10Y2Y remained in this kind of red condition alongside weak payroll momentum, curve steepening pressure and cautious risk appetite appeared within a 3-month window in 8 of 11 comparable instances. Energy remains the clearest cross-asset support for the inflation side. Decoilatico sits in the green set, with green defined as favorable momentum, because crude is moving in the same direction as inflation pressure. In the historical sample, when energy prices were green while growth indicators were still red, commodity strength and broader inflation sensitivity showed up within a 3-month window in 8 of 11 comparable instances. If 10Y yield crosses 4.45% and holds for 5 consecutive sessions, the historical inflation composite showed acceleration in 9 of 11 similar instances. That kind of move has historically fit a more inflation-sensitive regime map, where the pricing structure becomes more reactive to rates. If fear and greed drops below 15 and holds for 5 consecutive sessions, confirmation deteriorated in 7 of 9 instances. That would fit a weaker coherence backdrop in the historical record. The map is live. These conditions are being monitored daily across all 19 series. Atlas is an automated rules-based engine that does 2 things in parallel. It publishes a view of the broader macro environment, and it runs a fixed 4-layer mathematical framework across 407 liquid symbols every trading day. The environment view and the symbol-level condition log are separate outputs shown side by side. The regime does not select the symbols, the 4 layers do. Atlas monitors symbols independently of any regime label. Members study the outputs and decide what, if anything, to do with them. Atlas is the automated rules-based engine inside given analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework, price structure, rate of change, risk regime, and market participation, across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as a potential long or potential short condition under the framework. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols. The 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. Atlas, Atlas, Atlas. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.